Candle range theory trader back with you with another video talking about catching these key momentum candle range theory straightaway trades using the 4 hour chart. So let's not waste time and get right into it. So what this video is going to cover is what is the straightaway trade to catch this momentum, diagram of what to look for, a simple decision flow, some rules to remember, and some chart examples. So the candle range theory straightaway trade is something that will definitely help you catch those moves that are going to move in a straight line. Okay. That is the expectation. You're not expecting a whole bunch of chopping around consolidation. No, this is for folks that want to get straight to profit as soon as possible. Now, the catch with this is that it may take longer to develop as it has no set money candle. If you don't know what I'm talking about when I say money candle, you're going to want to check the video in the description. It talks about the candle range theory in detail. In essence, though, it's just a candle that pokes above a candle's range and then closes back up inside of it. But it is worth the wait when you select the right range as the trade. Now, the key part of this is selecting the right range, okay? Now, you'll need the ATR candle size indicator to understand the charts. And if you don't know what that is, once again, videos are linked in the description to get that indicator because you don't want to trade every single candle range and hope for the best. You need to be strategic about this thing. So with that being understood, let's take a look at what we expect this trade to look like on our chart. So this is just a crude drawing here of what we're expecting to see. So first off, we have our identified range. Okay, so when you have your ATR candle range indicator, it's going to highlight the candles that exceed their average true range for the 4 hour period. So for example, if you have a candle that moves in a 4 hour period of about say 50 pips, but you may have one instance where it may move 70 pips, that candle is going to change color. Those are the ranges that you're going to want to focus on and none others. Okay, so it eliminates all the useless ranges that we don't want to see. After that range is complete, what we expect to see after this is a consolidation above the range. In this case, because this is a short, all right? Ideally on the 4 hour chart. And like I said, I'll show you some real charts for this, but for now, just be patient, all right? So we have put on our chart here the candle range high and candle range low. That's just something that I pop on there using some horizontal lines. So you could just set a price alert though at the high if you have a short bias, and all you do is just wait. And ideally, all you're looking for is price to close back inside the range on the 4 hour or 1 hour chart. Now, some people may wonder, well, what about the 15 minute? What about the 1 minute? What about the 5 minute? I'm not, the higher the time frame, the more stronger the signal. Okay. If you have a 4 hour high and it closes and a 1 minute candle closes below it, that's a weak signal to me. I wouldn't bother with it because you're going to get a lot of false signals and you're just going to burn your equity down. Ideally, you want to see it close on, I would say at the lowest, the 1 hour chart. Okay, the 1 hour chart. Once price closes back inside the range, you see we take the entry, and then our anticipation is that price drops back down to the low of the range to close it out. All right. And just for a long example, we just flip it upside down, but same premise. You may have an ATR candle that exceeds the ATR period in one given hour. A solid consolidation. You are not trading here. You are waiting. Okay, you're waiting for price to close back inside of the range, and your anticipation is that it goes straight to profit. All right. Now, it may not go straight to profit in an hour or two. We're not talking about that. But ideally, you don't want to see price break out back outside the range once it closes inside of it. That's the expectation. If price does do that, obviously you'll have to get out, scratch the trade, look for another one. Okay. So here's our decision flow to determine whether or not the trade is worth taking. First thing we're looking for, is there an ATR range that is, I like 50 pips or more. Okay, 50 pips or more is my preference. Okay, if yes, continue. If no, there's no trade. The next question you have to ask ourselves, has price consolidated above or below the range? If yes, we just keep watching that pair. And if no, we just continue to wait. Okay, and again, set a price alert at the high. Okay, set a price alert at the high or low, so you'll at least be aware that, hey, look, price may be crossing this. Just because the alert goes off doesn't mean that price is going to close above it, but at least you'll have the heads up to say, hey, you might be ready to get in on this trade. Now, the entry signals that the price must close back inside the range on the 1 hour or 4 hour chart. Any lower time frames, that's on you, but for the sake of this system, 1 hour minimum, not 15 minutes, not 30 minutes, 1 hour. And then once it closes back inside the candle range, it must not break back outside of it. Okay. All right. So stop loss goes above the most recent 4 hour or 1 hour high or low, and we're expecting a straight drop or rise. So we have to keep in mind that give price 1 to 2 days to close back inside the range. If it's more than that, scrap the trade. We're not interested. In other words, If you see an ATR candle on a Monday and price still doesn't close back inside the range by Wednesday, we're not interested because let's say, for instance, with this pair here, let's say this is Monday. This happens on a Monday. All this up here is Tuesday, and then it keeps consolidating on Wednesday. It never closes. By the time Wednesday's session closes, it does not come back inside the range. Chances are it's probably just going to keep going up. All right. Chances are it's just probably going to keep going up. So that's just scratch it. All right. On the day you see that ATR candle for your range, we expect for price to close back inside of it within a day or two. 2 days is the absolute cutoff. All right. No exceptions. Okay. Even if it goes on there later, we don't care. All right, so you could have bigger stop losses, so keep that in mind for your position sizing. And as well, once price closes inside the range, it should not break back out and close. It may pin the range, but it has to close back inside of it. Okay, pinning the range though can be normal. So let's take a look at some real examples here. This is just a one step, just to something to see to the progression of it. So here, right here is our ATR candle. This is on a Tuesday. Okay, obviously this is more than 50 pips. This is Euro, New Zealand. All right, but this can work on any trading instrument. Doesn't matter if it's crypto, futures, stocks, etc. Okay, so there you go. ATR candle right here. Price breaks above the range, closes back inside of it, and then pops right back out. All right. So we just wait because what we're waiting for is for price to close back inside this line right here, back inside the high of the range. Okay. So that does happen right here on Wednesday in the 3 p.m. hour. All right. So when this is a 4-hour chart. Okay. But once again, Tuesday, this was on our watch list. Wednesday, okay, so like I said, this took a lot of time. These are 4-hour blocks here 4, 8, 12, 16, 20, 24. This is a day. So you're not watching the chart. Like I said, just set a price alert for the high of the candle. All right, or if you want to set it a little bit above, that's fine too. Once price closes back inside of it, let's take a look at the result. Boom. Thursday, we hit for 82 pips, done deal. It did retrace a little bit. All right. So if it does come back outside of the range, here's how to handle that. The price should not break above the candle that broke back inside the range. In other words, the high of this candle right here, the candle that broke it, this high of this candle right here should hold. Let me put an arrow so you can see that. This candle right there, right here, that candle right there, whatever candle broke inside the range, the high of it should hold. If it comes back and breaks this candle, get out. Okay, that's where your stop loss should go right there. All right, so we see the result there, drop down 82 pips, done deal. This is the momentum that we're looking for. Again, we're not trading up here. We only start to trade once price is back inside the range, and we try to ride that momentum down to the bottom of the range. Okay, so let's take a look at some examples here. Now, these are pretty much finished products, but we have a 5 a.m. range here on Euro New Zealand. Then we have 4, 8, 12 hours of just kind of consolidation chopping around. And you see how price pinned it and then closed up here? See, that's not an entry right there. Our entry is when price closes below, okay, below. So you would have been having, this is, even though this is 4-hour, on the 1 hour, there should have been a close somewhere there. And then price did drop 93 pips to the bottom of the range there, okay? But again, once price closes below the range, that's where we start to get in. Another example here. This was Tuesday. Our ATR candle was 9 a.m. right here. We have a whole bunch of consolidation. So once again, let's go back to our diagram. Remember, we're not trading all this. No trade zone. We're not trading above the range. Okay, so let's go back. No trade zone up here. Now, there is an entry here, but then notice how price broke above the range. But remember what I said. The high of the candle that broke the range, let me put the arrow back on there so you can see it, plain as day. This is your no-go zone right here, right there. That's the candle that broke inside the range. So we just enter on this candle's open. So even though, yes, price did come back out a little bit, this is your invalidation zone. In other words, the trade is invalid if it closes above the high of the candle that broke back inside the range. So this can be normal, and that was a 50% retrace. That was a 50 pip retrace. Sorry about that. 50 pip retrace. But if as long as your position sizes can accommodate that, and as you can see, this was a 200 pip move, All right, just nice, clean. Once it retraced just once, closed right back inside the range and never came back out. All right. So this is your stop loss level right here. Whatever candle broke inside the range, that high must hold. Period. Okay. It can pin it like it did here. Let me move the arrow so you can see. A little pin to it is fine. It should not close above it though. All right. So let's keep going. This one right here, we have a 5 a.m. candle range. All right. That's above 50 pips. Then we have 4, 8, 12, 16 16 hours of consolidation. Remember, just set your price alert. Okay. You're not watching this for 16 hours. You got to go to sleep. You got other stuff to do. Price closed back inside the range here. This is our entry right here. On this candle's open. Price closed back inside the range. Bang, 58 pips. Actually, even more than that. It broke out the range and kept right on dropping. But I'm only teaching you to trade from the top of the range to the bottom. So that's how that worked out. So let's go to the next one. There are actually some longs now. We're going to take a look at some longs. So let's look at things the other way. So this one here, we have our range here for 83 pips. This is the low of the range, some consolidation. Now this one is a double bottom type deal, W pattern. Carol price closed inside the range, so you could have entered here. So let's remember though, where is our stop loss level? Let me grab the arrow. Right here. This candle right there, okay, cannot be closed below. Like I said, it can pin it, which it did right here. Okay, this little candle right here did pin it a little bit, but then boom, it took off, went for 100 pips. All right. So don't let these little retraces scare you. As long as the price is inside of the range, the trade is valid. All right. As long as price is inside the range and it's not breaking below the candle that closed inside the range, that you're fine. You can hold it. All right. Next example here, let's see, long trade. This was the range right here at 9 a.m. Priced closed inside right here. So the entry is here, right here, right here, right here, where my candle is. Okay, and then where is our stop loss going to go? Stop loss is going to go at this candle's low, this one right here. That one. That's the level that cannot break. But this was a straight rise, and this is what we like to see. Let's take this momentum all the way up. It didn't quite hit the top of the range, but I mean, come on, guys, use your common sense, especially if you start seeing yellow candles that spike up. That's going to be a good time to go ahead and just get out and take that. Okay, so yeah, that was a 90 pip profit. So once again, though, price closes back inside the range, straight rise to profit, and go ahead and get out. Let's see, next one. Here's our ATR range here. This was a 115 pip range. I like to see big ranges, but with big ranges, sometimes they can take a little longer to develop. So this was a Monday, or this was Friday. I'm sorry. The range developed on Friday, but the trade didn't come until Monday at 4:45 p.m. at the near the market close. Where is our stop loss level though? It's at this candle, right? And I'm stressing this because I want you to know when to get out of the trade. Let's see here. Here. This is the candle that closed back inside, so price must stay above the low of this candle right here. This is the one that closed inside of it. We enter, straight rise to profit. That was for 102 pips. Okay, so it started on Friday, but then the trade wasn't until Monday evening, Eastern Standard Time. All these times are Eastern. All these charts are 4 hour. Okay, so that's that. So in conclusion, the ATR range is the most important candle to identify. If there's no ATR candle, you are not trading. Only 1 to 2 weeks. I'm sorry, 1 to 2 trades a week is decent. All right, you can easily take one trade. I've just shown you a couple trades worth more than 100 pips. One of those a week, you should be fine. So the stop loss must go below or above the candle that breaks back inside the range. And ideally, price should stay inside the range as well. So one day is best for this trade to play out. But again, if you see an ATR candle on Monday and price still doesn't close back inside the range by Wednesday, scratch the trade. It is null and void because it's more likely to just continue going in that same direction than it is to close inside the range eventually. Will that sometimes happen though? Yes. But for the most part, the averages just the laws just aren't in your favor. Okay, so appreciate your time and attention. Thank you so much for watching. For more great tips, etc., just be sure to subscribe to the channel. Follow me on my Twitter. Check out the other videos on this channel and check the links in the description for the ATR candle indicator if you want to be sure to see how to get these range candles. Okay, get these range candles. All right, but thanks so much for watching and have a great day.